I'm Bill McWilliam, president of Cascadero Copper, CCD on the TSX Venture Exchange. Cesium is one of the world's rarest metals with a growing industrial demand. Drilling is underway on our Tehran property in Argentina to prove up a cesium resource. Cascadero's patent-pending leach process has the potential to make Cascadero the lowest cost supplier of cesium in the world. Visit our website, cascadero.com, or phone us at 604-924-5504.
You're listening to HowStreet.com radio, available online at TalkDigitalNetwork.com. Welcome to HowStreet.com radio, the online source for market opinions. Here is Jim Goddard.
My guest is home ownership consultant Ross Kay from thewealthyhomeowner.ca. Welcome back to the show, Ross.
Thanks for having me back, Jim.
We're told that housing starts in Canada were stronger than expected. To be precise, 223,232 starts in August. That sounds pretty good. Are those numbers real, though?
No, they're not. I suspect this year that you're going to see around 220,000 starts, but that's the same number we would have forecast at the start of the year. These up and down numbers, they're just a result of seasonal adjustments by the people who are calculating the numbers, and it's also there's a correlation between starts and completions. So we don't actually look at starts; we look at permits. So we track permits, so we know that what's happening at the municipal level, because then we know what's going to happen in the resale market a long term. Now, usually when a start happens, there is going to be a completion down the road. So the start, you'll get a window, a length of period of time that it's going to take for that particular housing unit to be built. But these starts today, these numbers were already predetermined. It's not like it was 10 years ago. A builder can't even get financing on a development unless a certain high percentage of the units are already sold. That means that by the time that they actually start working on the project, the vast majority of the units, if not all of them, are already sold. You've heard the term pre-sales. Pre-sales would be an indication of that, where they sell units well in advance. So the starts that you're hearing about today are actually a result of decisions that were made often 2 to 3 years ago, culminating in the units finally starting to be built today. So there's one of the only metric that we ourselves do not have access to because it's not collected anywhere in the right manner that would allow us to use it. In other words, where we knew that the accuracy was correct, would be sales. So if we knew sales numbers with a reliable enough degree of accuracy, then that would allow us to interpret the resale market 2 or 3 years down the road. What we look at now is CMHC's data with the inventory under construction and the length of time that inventory is going to take to be built. We know how that inventory will interact with the resale market. So we know how certain decisions that were made years ago are finally starting to come into account. Actually, now that you brought that up, Jim, that's where one of the factors in a contraction bump, which is something we talked about in your show before. A housing market cannot just die overnight. It can try to die, but it's not going to die. What happens is that there were decisions already made 2 and 3 years ago that are now starting to take home, and that's why it takes a market a while to cool down.
Ross, the number that we were given, 223,000 starts, is that a good number? Does it mean we're going to have enough housing for everybody who needs it or wants it?
No, we are not building housing anywhere in Canada in the right manner. So what I mean by that is that when you understand how family or people work through their lifetime of ownership. So we have a term that we use with all of our programs because it's the understanding we have of how people evolve over their lifetime through home ownership. There are bottlenecks always in the housing stock. Right now, your housing stock bottleneck in Vancouver is our properties for the 40 to 50-year-old homeowners. That bottleneck is stopping them from selling their properties and moving on. Generally speaking, we're talking about townhouses now in Vancouver. In other parts of British Columbia, that would be single detached homes. And what those particular bottlenecks are what matters. You can build 300,000 condominiums. If there are not enough first-time buyers entering the market who wants to buy those, they're simply not going to sell. So, but again, I go back to that issue we talked about a second ago about the financing not being secured unless the sales have already taken place. So that is not a problem. And the other issue that everybody is always confused about this overbuilding discussion. What people need to understand is that as a housing market, and people actually in Alberta is anybody who questions our authority on this topic only needs to look to Alberta, because after the oil price dropped and their economy started to slow down and their housing market crashed, which again, you guys had me on the show way back then in 2014, I believe, talking about that. What home buyers do is they move to the highest quality home available for their home buying dollar. When a market is correcting, often, and in the vast majority, that quality is found in the new home market. So people have a preponderance to go towards those new homes, and builders have the ability to adjust their price far more quickly than a regular resale homeowner does. Builders have so much profit in their properties right now because of the way that the land was bought, how they've developed it, the profit margin they're able to get on their per square footage. They can adjust quickly. This is what you've seen happen in Alberta since 2014. Even though the resale market, they're going to say the average selling price is basically the same as where it was in 2014. That doesn't take into account that now you're getting a far greater house for the same home buying dollar. That's reflected in the new home market, where prices have actually dropped in the new homes. Single detached homes in Alberta have dropped substantially since 2014. And that's because people stopped buying in the resale market. They went out and found a builder that gave a really good deal on a detached house, and they bought it instead. So no, there is not an opportunity for overbuilding in the vast majority of Canada. And in the hottest housing markets, that being British Columbia and Ontario, no, they would have to double maybe triple what they're building today, Jim, before there would be too much supply.
Well, Ross, in my own neighborhood, I have seen 5-year-old houses being torn down and even a bigger house being built there.
Yeah, exactly.
So they don't even want the house; they just want the land.
Well, and we call that a building envelope. So now that's a term that we ourselves came up with. Even though building envelopes, it's a term everybody uses. We use it instead of saying land or lot, or if you're going to go with a high rise, the number of units you're able to build. So by using the term building envelope, it treats every single place you can build a house the same, whether that house is being built in the ground or it's being built on the 40th story of a condominium high-rise. The value of the building envelope is the most important cost in the type of house that is going to be built in that specific location. There was a long-standing ratio for like 50 years where it was 1/3 land, 2/3 for the building when a new builder would build. Those numbers have gone out the window now. If you're doing 50-50, you're probably underbuilding on the property. And that is a constraint that comes into place because of affordability.
We'll have more with Ross Kay right after the break.
Lotus Ventures Inc. is a BC-based medical marijuana company poised to launch into the rapidly evolving cannabis sector. Lotus is in the final review stage of the Health Canada approvals to become a licensed producer, having arranged facility financing of up to $12 million, plus building permits for its prototype indoor production facility. Shares trade under the symbol J on the Canadian Securities Exchange. Visit our website at lotusventures.ca.
I'm Douglas Mason, President and CEO of Rainy Mountain Royalty Corp., RMO on the TSX Venture Exchange. Rainy Mountain's Brunswick property is located in the Rideout Shear Zone in Ontario. With grab samples running as high as 32 grams per ton gold, a drill program will commence this spring to test the numerous targets located by recent groundwork. For more information, visit our website, rmroyalty.com.
Welcome back. We're chatting with Ross Kay. Ross, are inventories increasing as sales slow in Toronto and Vancouver?
So this will be something you would have picked up in the news there to come up with that question for me today, Jim. You've got people all over, realtors, housing analysts have been making these crazy claims about listing inventories rising for the last 3 months. I saw something today, a report come out from the National Bank, another report, the creators of the National Bank House Price Index. You know, highly skilled economists, been around for decades, commenting about the housing market, and lo and behold, they used a active listings to sale ratio as their metric to say that inventory had increased. And we laughed at them. We laughed at them because the chart had to do with Toronto, and the chart, it went such an upward swing, you would swear that there's virtually hundreds of thousands of properties available in the Toronto area based on this chart. Well, the fact is that metric is a false metric. It's bogus. It was created by organized real estate to hide the failure rate of the industry, as we've talked about on your show over and over again. So people should understand this. When we look at the market, we're looking at the market every single day. So we're looking at the listings as they're on the market today and versus what was on the market yesterday. And when you're looking at the market daily, you realize that the changes that everybody else sees because of the way that they read it are really not taking place. So let's look, for example, at Vancouver and at Toronto for the sake of the argument, because most of your listeners will be familiar with the soaring listing inventory discussions in those two cities. At the end of July, when we looked at Vancouver, Vancouver was sitting at 2,825 active properties for sale. As of yesterday, they had 2,505. That's a net loss of 300 properties for sale. Now, sales did not increase. It's just that the failure rate of those listings increased. Toronto, we're hearing, which is what that National Bank report came out today, citing numbers for the end of the month. So we're talking about there's no excuse that they have for their incompetence on this comment. This is the same firm that creates the Teranet National Bank House Price Index, which the OSFI has warned all the banks not to be using in their loan-to-value ratios, but the banks still use it. And they even disclose it in their quarterly shareholder reports. In Toronto, we're only sitting at about 2,250 listings. Earlier this year, they were running at 6,800 listings in the city of Toronto. Over the last 3 weeks, there's fewer houses listed for sale in Toronto right now than there was 3 weeks ago. But even with the 5,000 number we're talking about, that number is such a small percentage of how many houses are in that marketplace. it is ridiculously low. So, sales to listings ratio always follows one another. So your listeners need to understand this when you hear all this gobbledygook from organized real estate who've conned all the economists and housing analysts across Canada. Because all of these people believe new sales to listings ratio and price change goes hand in hand. And they will even produce charts for you over a long period of time where these two metrics, price and new sales to listings ratio, really seems to align. Some of the economists will even stagger it by 4 months, so the alignment is even more precise. But that doesn't matter, because if someone sells their house, they have to list it for sale first. When it sells, they move into a more expensive house. So, yes, obviously, if people are buying houses and trading up, they're going to have their own home sold first. So, you have that delay that some economists adjust for between new sales to listing and selling price. Because selling price, as you move up the sales chain, increases. So there is a natural correlation between those two numbers. But the correlation is reverse. The selling price is going to be recorded in the new listings, not the other way around. Every economist in Canada, every organized real estate association in Canada, every housing analyst in Canada, North America, I don't know if it's worldwide, but certainly North America, they all believe the correlation is the opposite way. But they believe that because when it was created back in the 1980s by organized real estate, it was created for the sole purpose that it's always going to match the market. Not that it had forecasted or predicted the market, just the opposite. The price movement already has taken place, and then you see the listings react to it. Not the other way around. Listings don't change first, and then you see it following in the price. There's a statistical answer for that where you have two metrics that naturally coincide with one another, which create a false illusion of one causing the other to take place. That's exactly what we're talking about today, and that is why your listing counts in Toronto and Vancouver are below what they were a short 30 days ago.
Ross, the BC government has now banned real estate agents from representing both the buyer and seller. Is this a good move? Again, organized real estate has controlled this conversation for 50 years. What the government has done is, in their own ignorance, it's their own ignorance to how the system works that they're going to allow what they call limited dual agency, whereby a sales representative can only represent a buyer or a seller in a single transaction. In other words, you can't do the double ending where you represent both the buyer and the seller. What any of your lawyer speakers that you may interview, Jim, or any lawyer, and decades and decades and decades of case law in every province in Canada shows is that it's actually the brokerage level where the problem is. So what has happened here is that organized real estate did the bait and switch once again. They did this bait and switch in the mid-1990s when buyer agency was first coming into Canada. The bait and switch back then was that we want to continue to allow dual agency. So they shifted the look where the government was looking into a new area. Now, in all fairness, back then, buyer agency was a brand new thing in North America. So
that was a different time. But now in 2017, we're at a new world, and it's sheer ignorance what's going on in both British Columbia and Ontario, and it's already taken place in Alberta. Limited dual agency is exactly the same thing as what's going on today. In other words, if a real estate brokerage lists a property for sale, I don't care if it's the same agent who listed that property, the same sales rep, or it's any one of the 100 or 200 or 1,000 agents that work at that, sales reps that work in that office. If they are going to have the buyer who wants to buy it, it's still under Canadian law called dual agency. What's going on right now is that they are actually allowing the brokerages to get away through legislation being held accountable for the last 20 years of lying to the public in British Columbia and Ontario. Because agency happens at the brokerage level. This is right in your Real Estate Trading Act. The sales representative is never even really addressed in the Trading Act, other than the fact that they're an employee. The brokerage is the one who the listings are posted through. The brokerage is the one who is responsible for the seller. The brokerage is the one who's responsible for the buyer.
Ross,
and it even gets worse.
So, Ross, does this legislation mean, okay, I hire a real estate agent to help me buy a house? Are they going to get me the best deal possible?
It is illegal in any province in Canada for a real estate to advertise, I will get you the lowest price possible for when you're buying a home.
Well, then what do you need an agent for if he's not going to get me the lowest price? Why do I even need one to buy a house?
Well, you don't need one to buy a house. You need one to give you access to the front door because of the MLS system. And you're not going to bypass that overnight. It's going to take 5 to 7 years before that system is moved with new technology. So you do need a realtor to get you in the front door of a house, but in all fairness, and to deliver your offer for you. But other than that, Jim, you do not want a realtor to do anything for you. If you want to know what the property is worth, then you hire an appraiser. If you want to know whether the building is structurally sound, then you hire a home inspector. If you want to know if your contract is properly written, you hire a lawyer. You hire all of these people, and you pay them less than what you pay the commission to a real estate agent. And there's lots of real estate agents out there, real estate sales representatives out there, who will drive you to the properties you want to look at. They will let you in the front door. They will do that service for you for a couple of $1,000, and they'll still make lots of money. So you get a whole team of experts working for you, plus you still get access from the real estate sales rep letting you in the door. But at the same time, you save money because you don't have to spend as much. So when we created the Wealthy Homeowner, one of the original premises of it was that we would have programs and strategies that attacked all these sort of things. When you start pulling this team of professionals together, Jim, it means all of the negativity, all of the risk, all of the bad advice that has been given by real estate agents, real estate sales representatives, realtors to the public is wiped out overnight. It is eliminated because the difference between a real estate agent, a real estate sales representative, giving you an opinion of value on a property is totally different than when an appraiser gives you an appraised value. So we have strategies in place ourselves for this specific topic that I'm going into a bidding war, Jim, and I want to have a building inspection done on the property, but my real estate sales rep tells me that if I put a conditional on building inspection on, that I won't be able to, I'll lose the bidding war. Well, Instead of just simply having a strategy to get around that, which we have, that's what the answer to the real estate agent is. And then what happens? People go ahead and buy the house in a bidding war, overpay for it because they didn't have an appraisal done, without a home inspection because the real estate agent told them if you put a home inspection in, any conditions in, you're not going to get the sale, and without their lawyer looking at the contract before they even did it. That's how organized real estate has maintained control for 40 years. There would be nothing wrong with that if the real estate salespeople were highly trained, highly skilled professionals who took training in all of those appraisal, home inspections, negotiation, law, and they continued to study 24 hours a day, 7 days a week. They lived and breathed getting better at their business. But unfortunately, that is not how the business works.
We'll have more with Ross Kay right after this.
Avon Resources Limited is a gold exploration company with significant projects in British Columbia, Saskatchewan, and the Yukon. Trading on the TSX Venture Exchange, symbol ABN, and the pink symbol ABN-AF. Surrounded by world-class gold deposits and mines, Avon's 23,000 hectares Forest Kerr Gold Project is located in the heart of the Golden Triangle in northwestern BC. For more information, visit us at avonresources.com.
Keep informed. Receive our weekly recap of thought-provoking articles, podcasts, and radio delivered to your inbox for free. Sign up for the HowStreet.com weekly recap on our homepage, HowStreet.com.
Welcome back. We're speaking with Ross Kay. Ross, a report came out that said the net worth of families in Vancouver and Toronto topped $1 million for the first time. Your business is Home Ownership Wealth. So what do you think of that report?
Oh, the biggest question of the day, Jim, you put it at the end of the interview. Okay, here's what the truth is. We have members from 2012 whose net worth is equal to 3 of their total year's income over the last 5. So their net worth, because of the house that they purchased, the strategy that they employed over the last 5 years, and because they knew where the market was going as the market was going along. So in other words, yes, there's a certain amount of luck in terms of the market not rolling over when it should have. It kept rolling on, but they were always aware when it was going to turn. Those people, 3 entire years of their before-tax income of the last 5, their net wealth has increased. Now, most people in that situation are at risk, as people in Toronto have found out. They have found out because they hear housing prices have corrected 19%. Okay, well, that's not really true, but for the sake of the argument, we'll just say that when it does end up being true, it's true. That's a wipeout of your net worth. Without a strategy in place so that doesn't happen, now I'm not telling you to sell your house and get out of the market. I'm telling you to structure your home ownership situation in a way that that doesn't happen. You don't lose. So these net wealth calculations that appeared in that study you're talking about, those are all false. Those net wealth calculations have been done since the 1990s. They're the same ones that appear in the StatScan survey. If you go back and you do house price growth against net wealth growth, it's 100% exactly the same. When we had the correction in Ontario in the 90s, net wealth of Ontarians dropped exactly what house prices dropped. Exactly. We're not talking a little bit. Within one single $1,000. That's how close it was. Net wealth and your home will dictate whether or not you're going to retire property. Those people who purchased 5 years ago, millennial, first-time buyers, purchasing their first home with 5% down, they are in a situation today, Jim, that by the 35 years from now, so they've owned for the first 5, by the time, so 35 years from now, by the time they're 65, 70 years old, they will have $2.5 million in the bank, plus their house will be bought and paid for. That is without saving any more money. That's what net wealth is, and that's how you build it in your home.
And Ross, we'll talk more about this. Always fascinating.
Thanks, Jim.
My guest has been home ownership consultant Ross Kay from thewealthyhomeowner.ca. You're listening to HoweStreet.com radio. If you have any questions for the show, you can email us at info@HoweStreet.com. I'm Jim Goddard. Thanks for listening.
Comments made on HoweStreet.com radio are an expression of opinion only and should not be construed in any matter whatsoever as recommendations to buy or sell any financial instrument at any time. Available online at TalkDigitalNetwork.com. HoweStreet.com radio is a production of Howe Street Media Incorporated.